Morning, everyone. This is George Evans from Convergence, and I want to welcome you to In Conversation with Convergence. As you know, we meet monthly with clients to discuss some of the top issues facing the industry. I am joined today by a great guest and client, Charlie Gilroy. Charlie is the Chief Operating Officer of the Asset Management Division of the Orix Corporation, and I want us all to meet Charlie. I want us all to hear a little bit about Orix today, but something I learned doing this was that Orix has been around since 1981, right? So I did not even know that. So Charlie, welcome.
George, how are you?
I am well. It's good to see you. And so listen, for our audience, even though I think your reputation precedes you at times, tell us a little bit about, I'd like our audience to learn a little bit about your pedigree, Charlie, kind of what you've done, leading up to kind of this Orix engagement.
That's great, George. Thanks. And thank both yourself and John Finney for hosting me. I really appreciate it.
You are more than welcome. We were anxious to have you on.
So I've been in the industry, it's about 39 years now. It seems like yesterday. I'll take it from the beginning and then I'll sort of bring it current with Orix. But along the way, you'll see some interesting touch points of what attracted me to Orix. Okay. So I started out for the first roughly 9 years working on the risk management side. So my background was really credit risk, counterparty risk at different Wall Street firms. I was with Smith Barney. I was with Bear Stearns, and that was during the crash of 1987, which was an absolute incredible place to work at that firm.
Yeah.
And then I spent about 5.5 years at Nomura. And it was during the late 80s, while I was at Nomura, that I first came in contact with Orix, both as a counterparty across the US as well as Japan. The second part of my career, I spent about 12.5 years at a firm called Paloma Partners. And it was interesting. Paloma really opened up my insights into the alternative universe in the buy side. Paloma's been one of the older seeding and incubation platforms. I was there. I ran credit, banking, and financing. I was both on the operating committee and the executive committee. While I was there, I probably saw about 150 plus managers that started, and that could be a one-person shop to a 50-person shop. Across multi-strategies. And the last role that I had at Paloma was I was involved in helping to sell their middle office and back office to JP Morgan, the hedge fund administration part of the business.
You know, I think we talked about this one time. I think we have an old mutual friend from the Paloma days, John DeRocco. And I think, you know, John, John, I started, John and I both started our careers at the Prudential Insurance Company, launching their securities lending program way back when, right? But anyway, so back to Paloma, Yep.
And look, I had decided that Paloma was an amazing career for me. I just wanted to move on. So the next chapter, I set up a consulting business, had a handful of assignments. And then what I did was I was effectively out on my own for about 15 years. And think about, because of that experience I had in the seeding incubation business, I was involved in 5 separate startups. And that was right during the financial crisis.
Right.
Collectively, they were all bespoke structures and businesses, raised roughly about $3.5 billion. But in each instance, those businesses were ground floor starting up and building an infrastructure, right, that needed to be robust enough to accommodate third-party capital and institutional investors.
Yeah.
And I think after the financial crisis, there was a major sea change that I started to see in the industry of how difficult it was to attract third-party capital, especially on the heels of what happened with Madoff and the Madoff debacle. The bar was really raised as far as setting up an infrastructure okay, that investors basically needed to see.
Yeah, it was
So
no more the rubber stamp, right? So,
it wasn't
right,
three people and a dog over a garage anymore.
right.
It was real investment in infrastructure and business across compliance, across investment, and across operations as well. Um, so the last business I was in was a smaller business. I think at the time I was a client of Convergence as well back then, and we were a small global macro. The principal had 30 years of pedigree from Tudor, and then the pandemic happened.
Yeah,
And to me, I was sort of at a crossroads as far as what I really wanted to do. Returns at that firm were just okay. They weren't bad, but they weren't great. And what I found really interesting was as I started to speak with folks during the middle of the pandemic, um, it was not the easiest time for someone who was north of 40 years old to be having a discussion about an opportunity of what's next. And it was someone who I had worked with back at Paloma, and he had mentioned Orix to me. And again, it brought me back to my earlier days
yeah,
when I remember who Orix was, but I was really pleasantly surprised to hear about what the firm was doing. And I'm here now, it's just shy of 3 years. I oversee the asset management business, but really the rationale of joining was a few things. One, I thought the firm was uniquely positioned, right? So that a real focus on middle markets, but in the private markets.
yeah. Which is a nice little niche space.
Correct.
Yeah,
So I thought the firm had a sort of an interesting mandate that they were basically operating out of for many, many years. The second piece, which I found intriguing, was the institutional nature of the platform. So not only did the firm invest in these strategies for almost 40 years in some cases, but they also had third-party capital at the time. And then the last reason was what I thought was this alignment of interest, where so many firms talk about how much they invest, and then what you find out is, well, it's a GP investment that maybe is 1% or 2% into the strategy. Orix has literally been invested in its balance sheet in so many of these strategies. And what, again, the light bulb went off is that the firm in some instances was seeding and incubating some of these strategies on its balance sheet. And again, appreciate the Paloma tie-in. To me, I thought, wow, what a unique opportunity this would be for me.
yeah. Well, tell our audience, Charlie, a little bit about Orix. I've certainly gotten up the curve lately, right, with some of the work Convergence does with you, but I think there's maybe 3 RIAs, a broker dealer. Maybe if you could kind of paint the picture for our folks about kind of who Orix is and what they do.
Sure.
Beyond
Sure.
kind of just the middle market, private markets, right?
Sure. I have to start at the top.
Yep.
So we're a subsidiary of a large Japanese multinational financial firm. So the firm cuts across leasing, financing across aircraft, the insurance business. There's an asset management footprint that's north of 420 billion of AUM. The firm has a balance sheet north of $100 billion. Again, Japanese owned. The stock, it's a public company. It trades not only on the Tokyo Exchange, but the U.S. exchanges as well.
Yeah.
So a real interesting conglomerate financial institution. Firm also owns a baseball team that just recently won the World Series.
Oh, really?
Yeah. So somewhat of a uniquely positioned firm, but more of a corporate entity. And to me, that also got me excited because there's a real long-term vision as far as how the firm has been managed. It's been around almost 60 years.
Yeah.
So there's some longevity there, but also scale and size.
Well, it's a little bit of a giant, kind of at times for certain parts of the business under the radar. Like if you asked me, I would have never known for over 400 billion, right? That's
Well,
a big number. That's an Apollo kind of number, right?
well, what's interesting is that the size and scale really has been a combination of organic growth, but also through acquisition.
Yep.
So one of the firms that they own on the asset management side is a firm in Europe called Robeco.
Oh, yeah, we know Robeco, sure.
Right. So one of the leaders in ESG. And the firm, let me speak a little bit. One of the other areas that the firm has really expanded is in the renewable side globally. So they've got numerous investments across the globe on the renewable side. So again, a unique firm. In the U.S., you mentioned Orix USA has been around for 40 years. The firm is, I think, again, uniquely positioned. It's got a balance sheet of roughly 10 billion, invested across a variety of strategies. The AUM, so third-party capital, is about 27 billion. And then separately, we also have a servicing business that is north of 47 billion.
Wow.
So when you think about assets under administration, we're north of 85 billion.
Yeah, which is pretty sizable. Yeah, in today's world.
Well, pretty sizable. And what's really interesting is that so many people don't really know who Orix is.
Well, that's why we're doing the podcast, right?
Yeah.
So let me talk to you about this, Charlie. So that's a great overview of Orix. Let's talk about your agenda now, heading up the asset management division in the U.S., kind of 23, 24, some of your top priorities, at the firm. Even though, I'm sitting here, it's hard to believe, right? Labor Day is Monday and we're September. I've got 2024 planning meetings like you, right? We're already talking about 24, but there's still 4 months left in the year. What's kind of your agenda for the remainder of 23 and kind of going into 24? Kind of some of your top priorities, Charlie.
Sure. So what I don't want to lose sight of here is in the U.S. Think of the three strategies that we run. We're primarily private credit, real estate, and private equity. And across those strategies, there's 11 different lines of business. 7 across the private credit side, 3 on the real estate side, and 1 on the private equity side. Again, I'm charged with helping to build the asset management platform.
Yep.
I report to a gentleman by the name of Gilbert Van Hassel. Gilbert's been in the industry 45 plus years. Gilbert was the former CEO of Robeco. So when Orix purchased Robeco, he was handpicked to be the CEO, and he recently joined Orix USA over the last year and a half. What's exciting about Gilbert is that he came from the Morgan Guarantee, so he was there for many, many years, ran a number of their fixed income businesses in Japan, in Singapore, and in Europe. Also was at ING. So he also sits on he's the global head of the asset management business for Orix. So he has advantage across not only what we're doing here in the States.
Yeah.
Right. The mandate, but both Gilbert and myself are really to grow the platform. Right. And we grow it a few different ways. We grow it by raising third-party capital.
Yep.
We also grow it by taking our institutional infrastructure and really integrating that further than what it is. One of the things I had mentioned early to you, George, was the firm's really institutionalized. And the growth has come organically, but also through acquisition. One of the things that I think is a differentiated component is that some of the businesses that we have been operating for 20 plus years, in some cases 30 years.
Yeah.
And they may go under a different brand, but they're part of the Orix family.
Yes.
And really my focal point is how I bring this how I bring that all together. Because one of the things that over the last 3 years is back to that operational due diligence. So many of the institutional investors, right? That's a big component of the final, do they invest or
Yeah,
not?
right.
And our firm shows extremely well on that front. And part of it is the folks that have been servicing these assets and asset classes on balance sheet for so many years are also the same people that are now servicing the business in third-party capital land.
Right.
So that shared service enterprise that we have really plays well with the large institutional investors that we already have, and some of the folks we're in the process of speaking to.
Yeah,
And
because
we're in
well,
the middle.
I mean, the longevity, right, and the pedigree of the people in
Yeah.
this kind of group. Where, listen, due diligence, as you know, can be a very, very difficult for some firms, right?
Yeah.
And who don't have that kind of background and depth, right? Which I think is what you're saying, Orix really has, right? So, um,
Clearly understanding the asset class, understanding how you service the asset class too. And again, that's the DNA of the firm across the middle markets, and it's been the DNA for a long period of time.
yeah,
On the third-party capital raising side, we've got a team now of about 7 or 8 professionals who've got institutional relationships that come from a variety of some of the names who could be clients of yours. So with real relationships, and we're really, I look at it, we're just getting started, and
yeah,
we're out in the marketplace, engaged in numerous conversations with large institutional investors globally who are at different stages of due diligence, right? And it's really when they get into the data room that I think our firm shines,
yeah.
because some of the businesses we have, and again, the pedigree of the folks that run our businesses, I'm clearly, I mean, I don't want to sound too marketing, but I'm really impressed with the folks that run the businesses. Really differentiated over the long career that I've had in our business. I'm really impressed with the people. And you know how much.
Charlie? Who are the typical institutional investors these days at Orix, and who are you targeting? Pension plans, endowments, foundations, insurance companies. I'm guessing all the
Yep.
above, and then some.
Sovereign. We're in discussions with sovereign wealth, with some of the pensions, insurance firms, other RIAs,
Yeah, interesting.
some of the larger family offices.
Yeah. So with
So
those other RIAs, does that get you moved to more even like a fund of funds type arrangement, or is that more just another? It's just an advisor making
yeah.
an investment, right?
So across the firm, across the 27 plus billion of third party capital that we have, it's either across commingled products that we have, a variety of different SMAs,
Okay.
funds of one. We also have CLOs.
Okay.
So one of the businesses under our private credit business is branded Signal Peak. The gentlemen that run that business have been with Orix now 13, 14 years. So it's across a variety of different products. And when you
Okay.
take a step back and look at the scale and look at some of the existing investors we already have, it's an impressive roster of large institutional players.
Yeah, and that's, I'm sure, what your team is leveraging, because there is a little bit of a herd mentality out there in terms of type of client, right, that you have, right? So priority one is obviously raising capital, right?
Yep.
Give me one more for this year and next.
Really integrate it, further integrating the platform that we have.
Okay.
I mentioned this organic growth, but also acquisition. And part of that is historically Orix would buy businesses. In some cases, they would let the businesses run
Right.
independent. It's really garnering the strength of some of these groups that have been in business for many, many years, right? And when you integrate them further and obviously have folks speak to one another
Yes.
across the asset class, it's really, really powerful. And Jeff Abrams, who oversees our private credit, that's one of the things. He was at Guggenheim for 15 years on the private credit side. That was one of the things that really attracted him to Orix, that we had all of these businesses, but folks really didn't talk to one another.
Right.
And I will say there's been a concerted effort over the last 2.5, 3 years of people speaking to one another. And what's great about that is not only does that help us with our balance sheet investing, but more importantly, I think when we have conversations with these large investors, the conversation isn't what we're pitching.
Yes.
The conversation is more, what could I do to help you?
Yeah. And so it's more of an enterprise approach, solution oriented. How about, Charlie, what are you seeing in terms of, let's start with the headwinds, right? The challenges right now, right? I would have said, if we did this podcast in March, we'd all be talking about this pending recession, right? That was a big topic in Q1, and I still think there's people who believe it's out there, right? But what are you seeing from the Orix lens right now in terms of some of the biggest headwinds and challenges that you guys are having in the market, and then we'll flip that and talk about the tailwinds.
So let's put the economy to the side just for a second, and I'm going to get back to that.
Okay.
I think two things front and center, and again, this goes hand in hand with my agenda. So I think raising institutional capital has become very challenging, and it's become very challenging. I think since the financial crisis in 2008, 2009, so many of the large institutional allocators, it was easier for them to allocate to the managers that they knew.
Right.
So if you go back and look at some of the larger managers that are out there, they have grown exponentially in the last 12 to 15 years. And most of that growth has come from large institutions that they know.
Right.
Okay. Who have developed these relationships where these firms now have become solutions for these large allocators, because appreciate, regardless of the economic cycle, these investors have to invest the money for the long run.
Right.
Right. And it's easier when you know that institution to continue to grow with them.
That's right.
So you've seen this parabolic growth. I take it to the next step. The pandemic exacerbated that, right? Because so many of those institutions, they were mandated that there had to be site visits. Well, in a pandemic, you're not visiting
anyone.
Not doing
that. You're doing this. You're doing the video, right?
So what happened? What happened was some of these large firms went to the managers that they know and said, "Look, maybe I'm full up in a particular strategy, but we're looking to invest in this strategy. Could you help us?" And again, some of these large asset managers were able to take advantage of those larger relationships. That being said, George, all it means is it's challenging to get in front of the right investors.
Yeah, I mean, right? I hear you loud and clear, because, as you know, part of our business is supporting kind of the operational due diligence and the risk, right, that we see at advisors, and we often see we see these manager lists, right, that the advisor lists that our clients have, and some of them change and some of them never change. And you also find, to your point, like behind the scenes, you have a couple people, you sometimes feel like there's two guys and a dog doing the due diligence, and they're already trying to keep up with 100 advisors and don't want to keep adding because they can't. We met somebody the other day who probably doesn't see people for 2 or 3 years, right, in person, right? So I see that. So your challenge is, how do you create some diversification with the applicator? How do you bring a new name like Orix to the table, right?
what we've found, George, is once we have that breakthrough conversation, our product set and our business really has been resonating.
Yeah.
So I'm excited. I'm excited about that. But to your point, the time to market has really elongated. Some of
Yeah.
these firms could take as much as 2, 3 years. So you
Yeah.
have to be constantly speaking to them. And,
Yeah.
at
We call
times,
it dripping, right? That's what it is, right?
well, at times you could run into what we'll refer to as deal fatigue, but appreciate the fact that you're in discussions with these large allocators. To me, I'm really excited. Since I've been here, we've got multiple of these discussions going on with some really an impressive roster of potential investors.
Yeah.
And again, if we can provide various solutions for them, that's really what we should be doing. And I think that resonates with some of those investors.
Yeah.
The other thing that I want to add is, as early as last week, you'll see from a compliance standpoint, the regulatory environment has really changed.
Yes.
Okay, and look
Biggest
from our
FCC agenda I think we've ever seen, right?
look from our perspective. You mentioned that earlier. We have 3 RIAs. We have a broker dealer under the platform. Look, we encourage regulation. It doesn't scare us. I think, but there's a cost to that, and you have to factor that cost in. And for smaller managers, that's really difficult because
Right.
that's a burden that these management companies basically have to get over,
Yeah.
and it's the cost of doing business, quite frankly.
But in your pitch, it's all about protecting the investor, right? I mean, that's really
100%.
what it is, right? And how about Charlie flipping to the tailwinds, the things that are kind of in your favor right now? You've touched on a lot of them, but if you had to sum it up, like what would you say the biggest thing going into 24 is? Kind of the wind at your back right now.
Right. So back to the economy and back to some of the byproducts that the economy's created. One of the businesses I really didn't touch on is the real estate space. If you think about what's happened over the last, especially the pandemic, over the last 3 years, the wealth gap in this country has really blown out. It's the best way to describe it. Okay. I'm not going to get political, George.
Do not. We'll edit that
I
out.
will not get.
Yeah.
But as a result, you look across the landscape of real estate and you look at affordability.
Right.
And I think the statistic that we saw was that there's a shortage of north of $7 million affordable homes.
Hmm.
Okay, so you've got tremendous demand now. Like you look at the rents and the increases of rents, I think over the last 5 years, they've increased 18%.
Yeah.
Plus, you've got this affordability issue. There's a major shortage.
Well, yeah. I mean, listen, we both have kids in their 20s and right out of college, and I'm looking at what they pay in New York. Right, they never could afford it unless four of them are chipping in. Right, to do it. Right, and then
Well,
and then you see this next big push out there is all these vacant commercial buildings that now there's companies starting to talk about converting them to apartments, right?
that's right.
I mean, and you're seeing that in a
So
big way.
one of the real estate businesses that Orix purchased back in 2016 is called Boston Financial. They're in the affordable housing business.
Okay.
They've been in business north of 50 years. That business primarily they deal with developers on the affordable side. They've provided hundreds of thousands of homes for multiples of hundreds of thousands of people and families. And if you think about, to my earlier point, the wealth gap, there's this misnomer when you hear about affordable housing, people immediately think about Section 8 housing, but this goes beyond. This
No,
really
that's
is
right.
workforce housing, right?
Yeah,
You're
that's
talking
right. Right. So that's a big opportunity for you guys. Very big, and,
well,
and and it's about doing the right thing, right? I mean, that's really what it is. So
well, Boston Financial has been in this business for a long time. They've got relationships with developers all over the country. Um, you think workforce, you think police, firemen, teachers, nurses. So what I'm excited is we're positioned really to help that and help uh, to try to basically that mismatch between demand and supply.
yeah, which, as
Um,
you said, that gap is just growing exponentially right now, right?
yeah,
Um,
without a doubt. So that's
yeah,
one of the things I think as a firm we're really positioned well for. The other thing, which is a byproduct I think of the economy, is I'm going to touch on the regulatory side because, and we've been doing this for a long time, George. What I find real interesting is because of all the changes and regimes in capital, the capital changes, especially across the banking sector,
yeah,
you've got this, you see in the press shadow banking, but I look at it as this direct lending business that has really grown dramatically over the last 10 years. And that's one of the businesses that Orix historically has been involved in. And across our private credit, we've got senior lending. We've got a business called NXT that's been in the business. The team has been together 25 to 30 years. They were at Heller Financial, Merrill Lynch, GE Capital.
yeah,
Orix purchased them in 2018. They're extremely positioned well for this direct lending, right? Where banks have sort of taken a step back just because of the
yeah.
capital regime.
Constraints. Yep, yep.
So that's one of the exciting things. And then from our perspective, again, I work for a conservative Japanese organization. Uh, we're well positioned from a senior lending standpoint. Uh, we structure typically the deals are structured with floating rates. Now with real interest rates, it's really attractive to come in at a senior level. LTVs have been reduced.
Yep.
So from a collateral package, not only on our balance sheet but for third party capital, the profiles for this direct lending across the senior space, I think is really we're well positioned for that.
Yeah, I mean, listen, on back to the private credit, I think you guys have a huge advantage, given you've been in that business, you have the infrastructure. There's many a private equity firm now trying to figure out private credit, right? It's an easy thing to quickly say, but it's a pretty different animal. And I think you're kind of ahead of the curve compared to a lot of people.
Just one of the things that I think makes Orix, I'll use the word unique. Our compliance people may tell me not to use that word. I'm going to use it. Across our different lines of business, we've got incredible origination capabilities across different shades and different sleeves of private credit, across the real estate space, because not only is it in the affordable, we have another business that is a large lender to the U.S. agencies, multifamily, seniors lending, uh, nursing facilities,
Hmm.
and again, the origination capacity across the firm is really dynamic.
Yeah.
And then pri- private equity, to a lesser degree, is a business I think that's been with Orix here in the States about 7 years. It's not as large. It's about $1 billion in total. We've only had a handful of realizations, small amount of investments. But again, the approach and some of the investors that we have is quite impressive.
Yeah, I mean, listen, we're about out of time, but I want to say this, Charlie. Uh, this was great learning for me, and I think are going to be for our listeners about really who Oryx is, because you know, and I think what it sounds to me like is you've come in at a great time and inflection point in the firm, really to kind of help harness the foundation and the history, right, of this firm, because it's pretty impressive once you start to lever it, right, and take it to the next level, and you can see it, and I can see kind of the excitement in you. I've seen you over the years. You're excited, and it's a great firm to work for, and I love your kind of energy and approach to this. So listen, I want to thank you. You were a great guest. You've been a great client of Convergence, and I'll tell you, I thought this was just a terrific conversation. So
Well, it's
thanks
great,
for
George. Thanks,
joining me.
and I appreciate the time that you're giving me here. I also think the what Convergence does too, the transparency across the institutions on the RIA side, I think is somewhat unique, and the data and I think how you curate it is quite
Yeah, well,
impressive.
thank you. I mean, I
So
just think
thank you.
you've got firsthand knowledge and working knowledge of it. Is there's 50,000 institutional advisors out there, and but some look great when you do due diligence, some don't, and you have to really know. You got to be able to provide people that look through, right? And I think that we've gotten very good at that. So listen, a real pleasure. It's great to see you, and thanks again for making the time today.
That's
All right.
great. Thanks, George.